Hello traders, everybody out there. Very welcome to our weekly trading show to kick off the investment week. Yeah, once again, Monday morning in US, here in the afternoon in Europe, and late night in Japan. We have today some nice stocks, some nice symbols, some nice analyses again, and we're looking forward to present them to you. Yeah, here on board, Rudi Born,
Hello.
asset manager in Germany, then Martin Gersch,
Hi.
portfolio manager in Frankfurt and Zurich, and Mike Seidel has some technical issues, so we don't know if he will join us. He's trying to get in, but yes, he might have some troubles, and it might happen that we don't see him. Yes, and me, Gilbert, I'm the CEO and founder of Traders Yard, also trader, and yeah, having some interesting things to analyze today. Good, then let's go into the risk disclaimer. Of course, risk disclaimer needs to be shown to you. Just some major things about it. Trading in future stocks and options involves a significant risk of loss. Traders can lose more than their initial investment. All trading strategies or ideas we present are used at your own risk. We are not responsible for any losses resulting from following any of those strategies. Yes, and there also might be a conflict of interest. Since we are traders, we may already be invested or soon to be invested in these symbols which we are analyzing today. So I'm just starting with an analysis of the ES S&P 500 index. I'm switching off my camera, just a moment. So, what is the current situation of the ES? As we see, in the past, we discussed the ES anyway sometimes already, but for me there is a slightly new situation currently. We see that we have a long up move, and since I'm always looking at the location points, it's following the rules, or basically the rules are quite fitting to the ES, that we always had some bounces from the location point lines. Also here, the crash and the pandemic crisis going up here, seeing here also a jump out of the SMA 8 on the monthly base. We are here on the monthly chart, and we are here. We have a slight red candle this month, not the biggest one, but what we see here, and this is interesting. I also mentioned it a few weeks ago that we might run into a correction. I'm not quite sure if this really happens, but we are extremely climatic in this situation. As we see, this is the climatic distance indicator, and on this climatic points there always starts sometimes a correction back to the SMA 20, or if we are going back quite into the different direction, there might be a recovery back to the SMA 20. So theory is that the market is always toggling around the SMA 20. Now we are extremely far away from the SMA 20, and of course there might be somehow a tension which might cause to get into a correction. This is from the monthly chart. The weekly chart shows the following to me. Of course, we see here the pandemic crisis, the recovery, and also good points here where the market bounced off. Also here where we see a good follow-up, or it's still rising into the long direction. But what do we see here? and this bothers me a little bit. We see this candle still somehow bullish, but we saw here an up move, and now it seems we are getting weak. And this candle is just bothers me a little bit, that we might get into a correction. And this is something where I see currently that it might come up at least a corrective phase. Does not mean that we are getting in a bearish phase, but at least that this tension, what we have here also on the weekly chart, that we are somehow getting back to the SMA 20 at least here, or even further. Daily chart also is somehow similar. We see here the good bounces with signals up, up, up here, and here we see that we just had a short correction, but this phase here is not that strong anymore, so it goes already more in the side, and here it seems we got a bounce from this area here from the previous high. We got rejected, and we had here a very strong candle, short candle on Friday. So this is my view currently. Of course, where can it get back? We see here the SMA 20 on the weekly is somewhere around here to get into this area, or if we are taking the monthly, it might be here somewhere at around, even if it gets back and tries to touch or reach the SMA 20 in the monthly, we could get back to 3,650. So I don't know. This is just something what bothers me currently, because it's very weak, this phase here, and we saw a very strong candle to the back. Also, some announcements from the Fed came out on end of last week, and they were also causing some troubles. Okay, good. So what do I have in the bucket today? This is DaVita. DVA, it's a global US provider of dialysis services for patients with chronic and acute kidney failure. The fundamental data are not that bad. We see not really strong increase of the revenues. In the quarter, we see a slight decrease of the revenues on the quarterly base. We see here on the consensus, EPS consensus, that DVA missed it quite much once, but the last one was quite fine again. So DVA was above the consensus. What we see here is that there is a strong hold base on the recommendations, and yeah, so not really strong buy, so it's quite neutral. But of course, if we come into a phase like this, that we are getting in the correction, this might also just follow the overall market. What do we see here? DVA got into a resistance area of a previous high. It was broken, but it seems it got rejected. And what bothers me, or what I just see here, is also if we see the monthly chart, we see here a short reversal, on which we also see here a short reversal bar. So it's not really that strong anymore. On the weekly chart, there was a pullback here to the SMA 8. Here there is a bullish, this one here, there is a bullish candle, but the other one, the following candle, is a bearish, is a short reversal bar. So this, it seems this candle got wiped out. It's not really that strong anymore, and we might come back into at least a pullback to the SMA 20. So this also is here. If we look at the daily chart, so we see here the up move, we see here the bounce back. Market went up again, but got rejected here at this point. And now looking at this candle, on Friday we saw a short reversal candle. So we have here the possibility to get into this candle somehow like this, that if to follow this short candle, that there might be an entry at 120, around 121, and the stop should be very tight, of course, 124. So in this, and what we should aim here is, in the first moment, is the weekly SMA 20. So we see this is somewhere around here. So there is currently a potential to get back to this SMA 20. Of course, it depends on the overall market, but it's not really a short where I say, okay, this might be a really short, but there is a big potential now based on this situation here that we get back to about 113, about something like this. Okay, so what is the next one? This is the Northrop Grumman Corporation, NOG. It's a US manufacturer of mainly naval, aerospace, and information technology defense equipment. So it's in the Army sector. Also quite some up moves in the annual revenues. The quarterlies are quite flat here, not really an increase. Earnings looking not that bad. Also here the consensus EPS are quite strong. But yes, I mean, I need to say that currently I'm not really happy with these symbols. I currently do not find any others which really might make sense. And basically this would be, from that numbers, would be rather a long setup. But since the chart shows a short setup, I of course also need to look at the chart, and I need to follow the rules of the location points and the chart. And what does it mean here? Very short. We are with NOG in a sideways phase since quite a long time. We reached previous highs, and this is the monthly candle now. It's not really finished yet, but we are at the upper point, and we are, and the candle seems to be rather a little bearish, or at least it would tend into the short direction. The weekly, still also we had a strong up move here. Now it's getting into the side, and this candle basically was the reason why I said, okay, this might have a potential into the short direction here, because we had a reversal bar, quite a strong reversal bar into the short, and the market closed below the SMA 8 on a daily base or at the weekly. So if we are switching on here the location points, weekly SMA, you see here, we have here the up move. Here also good reaction out of the location point line, SMA 20. Here there is the side phase, was not possible to really break out here. And we saw two strong candles into the short direction. And what also causes me now to think about short is this candle, because we see here there is correction, goes up to the SMA 20, and we just got rejected at the SMA 20. So what can be done here again is, on this candle here, on the last candle, a short position could be taken, and yeah, we should, in this case, the SMA 20 of the weekly could be a good, let's say, target to get into. There is also a location point cluster, the EMA 130 of the daily and the SMA of the weekly. So this could be a possible short scenario here. Okay. Yes, this is from my side. Rudi, it's your turn.
Awesome. So please hand me over the screen so that I can show it from my perspective.
Yep. Give me a second.
Yes, of course. Until then, I can introduce what I'm talking about today. It is energy. We have the crude oil market, but I don't want to talk about the crude oil by itself, the WTI, the crude oil future. I want to talk about the some stocks in the energy market. Let me switch to my screen so that I can show it to you. I think this is giving us a really nice opportunity currently and preparing us for a really strong move which might follow soon. So I will switch my camera off so that you can follow the screen in the biggest size possible. So what I'm talking about is in this case Exxon Mobil, XOM in this case. You can see this is the weekly chart. So it's not a really short-term thing. It is something, it can last for a longer time, for a period of weeks, for example, but very often you have the initial move in a few days or after a few days. So this is something I really like. I like to trade the strong moves. I want to see that the market after entering a position is moving forward really fast, so that it leaves my entry level hopefully into the correct direction, of course, but really, really fast, so I don't have to suffer so much from waiting, oh, what will happen here or there. So what we are looking here is, in this case, the bond bars, the blue bar indicator here, which is very, very often giving us a good idea at the turning point or sometimes at the continuation point. This sounds funny. Yeah, how can it be? It is something indicating not the direction. The focus in this case is not on the direction. It is more like the next step might be a fast one. So you can see it here, for example, after breaking this top level here, we were pushing really strong into the previous direction to the upside. For example, here in this case, it was a strong move to the downside. In this case, it was a strong move to the downside. In this case, it was a strong move to the downside. In this case, it was a continuation to the upside. So as you can see, it's not a turning indicator. It's not an indicator for long or short. It is an indicator for the next one will be a fast one. And that's what I like to trade the most, because this is giving me, no reasons to cry too long for waiting for something to happen with the market. Of course, sometimes it's not working perfectly. Don't overestimate any system, also not these bond bars, the blue bars here. You can see it sometimes can take a while, but very, very often the next move is a quite fast one. How do we deal with this? The good thing is it's quite easy. As soon as we see something like this, as we see here with Exxon Mobil, you can see, let me put these lines on it. You can see when the market is moving forward through this top level, we will wait for a continuation at least. So this is our minimum target to the 69.27 level here, which is our minimum target. Of course, you can see sometimes it's going very, very far. Sometimes it's going very far, as you can see. But this is our minimum target. We are normally taking profits here. If you want to have your own strategy on this, you can, of course, maybe take profit here, half of your profits or a part of your profits only, and keep the rest running with a trailing stop, of course. But this is a very typical situation that at least at minimum the market is moving to this direction. This is just the same distance like the bond bar here by itself, so it's not a big deal. Just estimating that when the market is pushing through this level here, then we will continue to this level. On the other side, when the market is plunging through the lowest point of this blue bar here, you of course can also use this as a candlestick if you prefer. But if it's pushing through the lower side here, the south end, we will at least expect something like this, like a movement like this. It can be more in this case as well. This is not given by these indicators. It's just the first glance. Where can we expect the market will push through? The red line here is the initial stop. So for the long side, you can see the stop is at 63.05. And for the short selling, I will tune it up a little bit or zoom it up a little bit so that you can easily see the numbers here. I hope you can see the numbers. So this is the level here for the short side. This is our entry. I just need to mention the green line here. This is our stop limit level. In this case, we want to sell short because we want to have the downside if the market is breaking through this one. So this is a sell stop. In this case, a sell stop limit. And this is our limit. So in case sometimes it happens that the market is opening here at this level, for example, then of course we would not get any position here because it is below our limit, our sell limit in this case. So this is preventing us to get any moon price which is far off what we expect. Of course you can guess that a starting level at this short before our target is not what we want to have. So the market needs to let us in here or here depending on which side will be triggered. We have some small indications here as well, which is just giving us a chance. If in case we have a gap, for example, here to the downside and the market needs to come back first, then everything is okay. But if we have a gap here and the market is continuing to the downside, as soon as we reach the first level here, we will kill this short sell situation because we say, okay, the market is running into our direction, but unfortunately without us. So this is our kill switch for the order. So we will cancel whatever we have when this level is reached. And we have another thin line here, which is also giving us something like a kill switch. The funny thing is we are not trading the direction, we are trading the movement, the power of the movement. So in both cases it can happen that we have a short position and later we'll have a long position. As long as the market is not going through this level, we keep our long position or the long order in this case alive. So when the market is not pushing through this level, we will wait. Maybe we will be stopped out here with the short side, but on the other side we will get into the market for the long side and hopefully reach later the target or the minimum target or whatever you want to reach with this idea. So this is our idea here with Exxon Mobil. It's really, really easy. You even realize I'm not talking about some fundamentals. I'm not interested in what they are doing beside of whatever. It's just as a trader, seeing where's opportunity for a fast move. This is very, very often happening. It's not all the time. You can see here sometimes it's not working. We are filtering these here, but this is something more complicated. I will talk to you about this maybe next time. But even if you trade these few not working here additionally, you can estimate that this is a really nice, profitable trading idea or trading system, which in most cases or in many cases, let's say it like this, a little bit cautious because of the law. Of course, we should not overestimate that every trade is positive, but there's a high probability of having some fun with this. Okay, this is my first part, but I'm still staying, or I will stay in the energy sector. In this case, it's Dominion Energy. In this case, it's not the weekly chart, although we have a bond bar here as well. You can see this is working in many, many markets here. But in this case, I'm not focused on this here. In this case, I have my focus on the daily chart here. So this is something I also like a lot. I'm turning off the blue levels here, the bond bars, because I don't want to distract you. You can see there's nothing in it. It's really a naked chart here. It's plain vanilla. I'm just talking about the movement. And what I really like to see is what is the strong direction. And when you can see the last strong move I've seen is this one, for example. And this one, please think by yourself. Is this a strong move or is it a weak move? And the next one was a move to the downside, which is from this top level here to the down level here, and this is more or less like this. Please estimate by yourself which side is the strong side and which side is the weak side. I by myself think the weak side is definitely this one in a really, really corrective pattern. It's a corrective pattern are normally in an ABC fashion, or if not in an ABC or a three-wave pattern, it is in a shaky up and down, back and forth with a lot of overlapping. And this is indicating us, okay, this is a counter trend move, and this is clearly to the upside, to the downside. But when the counter trend is showing us the downside or heading down, and the last one, the last strong one was to the upside, I think it's a best guess to think that the next movement needs a continuation to the upside. You can see this several times. You can just compare this to this, for example. You can compare this to this ABC pattern. You can compare for example, this to this here, for example. You can see this is not something really rare. It is something you can see many, many times. Sometimes you cannot clearly decide, is this corrective, is this impulsive? If you cannot decide, keep your hands off, trade something different, check the market for different situations. You have these patterns, these kind of patterns in so many, many markets. In this case, for example, I don't want to mention this but you can easily see this is the strong side, this is the weak side. So you have an idea what direction you want to trade this. So that's the introduction to this one. So my idea is I want to have a long position in this one. So shall I buy now at the very moment? No, I'm not doing this. I'm normally keeping it easy and saying, okay, this is the lowest point, this is the previous lowest point, and the high in between is a possible trigger to the bull side. It's really easy. It's not high math. You don't need any indicators. You can, of course, add, if you prefer, you can find some indicators and saying, they are also supporting my idea. Of course, no doubt about this. But even if you're not able to use indicators because, for example, you see a chart in the newspaper or somewhere, a friend in the bar is drawing something to some piece of paper, you can easily see, no, this is nothing I want to buy, or in this case, this might be something I want to buy, at least when the market is pushing through this last level. So for a first idea where the market is leading us, I just think, okay, this is the first part of the up move. In case, this is not given yet, it is a preparation. In case the market is giving us a low here and not continuing to the downside and pushing through this level, I would say, okay, the first one was this one. We should expect something similar, roughly 100%, which will lead us to roughly 87.90 roughly. So just to have an idea, how far will this go? You can see this is very, very often. If you have this one here, you can say, okay, continuation, same size. If you see this one here, you can say after the shaky movement, you can say a continuation here, the same size, for example, and you can easily guess this, and this is nearly same size as well. So you can see, okay, this is seemingly really typical. Whenever I see things like this, I'm quite of good hope that the market will do like this. Unfortunately, we have to wait. What will happen when the market is doing this first? It is a no trade situation because we are not pushing through our trigger line here, which is giving us my kick into my back part to move forward. In this case, when the market is going through this level, this is my indication for, okay, now let's buy. So I place a stop buy order here or stop buy limit order here with a target level here and a stop order below this one. But if you follow me for a while, you will see that I'm not using this lowest point here for a stop. I trail something like a Fibonacci level here, which is from the lowest point to the trigger point, a little bit above the trigger when we are in the market. And then I take the 78.6 level as a stop. This is maybe not a big deal. It seems to be a small difference, but on the other side, it might be a big difference with risk and money management because the risk-reward ratio is coming into our favor. And you can try it out. Try both, stopping here, and you can see, oh no, it's a big difference in the risk-reward ratio and helping me with more profits. Of course, it has a negative impact of the hit rate. It can be that we are stopped out here, but the probability is not really high for this one, so the benefits from the better risk-reward ratio is way better than the risk of being stopped out here and the market is turning before the lower possible stop here. So this is what I'm dealing with. Of course, you can do some extras here. You can, of course, try to find something like a level, a cluster level where several Fibonacci levels are, for example, the 50% level. The other one was pushed through already, so it's not necessary to show it anymore. But the 50% level, it might be some kind of a support. It might be that the last previous highs here may give us some kind of a support. The former resists here may become a support, and maybe something like an extension level here. You can see we have something like several levels here on nearly on the same size, on the same level here, and we can of course also measure something like symmetries. This part here, for example, and say, okay, from the same level here, you can see, okay, we have something really interesting here. We have 4 lines here, very, very close to each other. I guess I can get more if I have some relations of these old setbacks here. So we have a good chance that the market can turn here. So if you like to have a more aggressive style for trading, you can also have the idea, I try to enter the market here or switch to a lower time frame, for example, an hourly chart or something intraday, and see whether you have something, the same idea. You can see it's exactly the same idea, but on a lower time frame. If you have this, you can say, okay, I'm well prepared to enter a long position because we have a seemingly solid support level here. We are expecting something to push forward anyway. Of course, the risk-reward ratio is awesome in this case. On the other side, you may think of maybe a failure and the market will drop through this as well, but I think the risk-reward ratio is worth it. So if in the wake of maybe the current trading day or tomorrow we see something like this, and this is confirming here this level, you can of course choose for more aggressive entry level, but in my case we normally use this one. It's quite relaxed. We don't have to sit next to the chart all the time. We can prepare it now. Only if the market is plunging through this level here, we can say, okay, maybe we need to adapt a little bit the stop levels, and when the market at latest is going through this level, the 78.6 drop compared to this rise here, then we know latest at that point, okay, the bull market will not come at that very point. So let's stick out of the market and choose something different, maybe a different market, a different price situation, whatever it is. So that's it from my side, both in the energy sector. I hope this is enjoying you and giving you a good idea how to trade. You see, there are 2 completely different trading styles. Of course, you can combine them and you can say, this is my long trigger and this is my target here from the Elliott wave pattern, for example, the continuation in the big picture. Or you can trade them separately and hope that the sum, the total of both trades is giving you a good trading result. We are doing both and having something like a diversification through these different systems as well. So I think Martin is next with his trading ideas, and I cannot wait to see what you have.
No, it's not Martin. It's me. Mike is back on track.
Oh, that's awesome.
Connection. My bad internet connection allowed me to be here. I hope it's stable enough for the next few minutes. So for this reason, I will also let my camera switched off. But I have one question. Can anybody make me to the organizer
Yes.
that I can show my my monitor?
Okay,
now
yes.
I'm referent. Great. But I can't switch my monitor.
Gilbert, are you doing this?
Yes, I did it, but just lost Mike somehow.
You lost me, but I can hear you.
No. Okay, now you are back now. Okay, I'm also making you the presenter.
Yes, I can see this. I'm organizer now, the presenter. Great. So now you should see my chart. And let's cross the fingers that my internet connection will be stable enough. Today I will talk about Arista networks and the dollar index, CDX. Both are very interesting chart situations at the moment. Let me please start with ANET, Arista networks, and you see here at first the charts, and it's a kind of a bit lazy trade because of I don't look about I care about the numbers or whatever. It's just a technical issue, but when we want to have a look to the numbers, just check what Market Watch is saying for the short-term period. We see growing in the estimates between 2020 and 2021 and further growing to $13 per share in 2022. This is good to see. It's not perfect, but the estimates are growing. And when we see the price target for the next 12 months, the median is at 361. It's a bit below our current price level, but the higher level is at the 433. So for the reason that we never know how far the trend will bring us, we can just check this daily chart. and to talk about a trading plan. Actually, when I see this chart, I have two different plans. I have a long trend plan and a correction plan. It's the short-term correction. That means we will see lower prices. What we have here is a nice chart pattern. I like it really. It's something like a high flag, but the volume is not the best in a flag. We should actually see what we've seen here during the first days on the flag, decreasing volume. But what I see here is probably not that interesting, because we have a high volume in the breakout. It was last day, Thursday. This is good to see, but what's not good to see is that we got a drop down into the flag, and the Friday was a bit tricky. We had quite high volume. You see here the spike in the volume, and we have a red candle. At the moment, there's nothing worse happened to this chart pattern. That means the flag is still the flag. You see this here. Here's the upper limit. Here's the lower limit. So not on the point enough, but I hope you see what I mean. This flag over here at the end of a spike period, and this is also interesting for me. And now let's talk about the chance for a short-term short trade. Means in this situation we will have a breakdown through here below the 360, and in this case I just used this freehand tool, and I hope I can show you as good as Rudi can do this. We see here this is the uptrend at the moment, and when we break down through this level over here, we have a short-term downtrend, and the next target level would be down here in this area here. It's round about 330 US dollar per share. It's the last strong buy level, and interesting to see here, you see here this corrective pattern with a quite normal volume, and the breakout came with an increasing volume, and this is always good to see that an increasing price is supported by increasing volume. So this might be the first level to the downside here with Arista networks. That means it depends on what the markets do today. The short will be here in this area below 360. This is the short-term trigger. Maybe we will see some volume, but at the moment the markets are coming back a bit. That means we had a worse Friday when you see the Dow or the Nasdaq or the S&P 500, a lot of losses. And at the moment in the pre-earning time, we see a bit more increasing prices, but we just should be make sure that the market is also ready for the next bullish move. And when we will see the bullish moves, then can we probably see not the breakout through the lower side, we can see the breakout through the higher side, the upper range, and this would be really, really nice. It would be also a small surprise, and we can see where we can plan our profit. That means when we see the analyst estimates, just let me check this one more time, that we have the correct prices from the highs. It's 333 US dollar. That means it's anywhere in the range over here. It's more, give me a second here. This would be the very, very strong long level, just in case that this bullish trend will continue to the next weeks, or maybe even the next months. I have no idea how long this can be, but we have. This is the long trend here, and a long-term target. For a short-term target, just double the difference between the low and the high of this range, and we have the high at 360 and the low. Sorry, you have the high at 370 and the low at 360. That means a short-term trade started maybe down here from this side, and the breakout over here would be anywhere in the range of 380 roundabout US dollar. And this is a short-term trade. The risk ratio is not the perfect when you trade here from the breakout position over here, but maybe you will get a chance to enter the market in an early stage. That means you can grab some prices down here. You have to switch down to the 2 or 5 minute chart, and when we see here a bouncing pattern and the market will go on, it's a small 1 to 3, a small trend over here that you see something like this in the 5 minute chart. It's a good indication that the markets will go up, and this is a good chance to enter here. And the stop for this long trade is for sure here short below this area, because of it's quite close to the entry here, to the bottom of the flag. But when the markets will break through, you won't be in a long position, because of the markets can sharply come down. And we could see last week what happens in the Dow, for example, how sharp the markets came down. And this is it's a risk at this side. But that means the stop is very, very crucial. And when you will have the chance to enter the markets in the lower range with the target of a breakout from the upper level, you have a good chance risk ratio, and maybe the trend is your friend, and you will see price increases up to 433 US dollar in the next weeks or months. This is my first plot today, and the second one is the DX. It's the dollar index. I'm quite sure you will know this, and it's quite interesting what we see here. I think it was Martin who was talking about the bearish scenario of the DX because of we have actually and normally the weakest period of the year at this time, but the market is playing the opposite. So we see this here. We have a very, very strong uptrend indicated through the Fed. The initial buy scenario was here last week Wednesday when the Fed was on the table, and you see what's happened here. This is quite interesting to see here, but we have more potential to the upside. Why? It's quite easy to see here when you see the trend. This is the bit bigger trend over here in this chart. You see here, this one is for sure broken lately as we went above the 91 US dollar, and we have a quite strong bullish move over here. And what I'm expecting now, it's a bit something like a correction over here in this area, maybe a high correction. This would be very strong for this market, or maybe a pattern like a flag or something like this, or a triangle. We just have to wait. But as soon as we enter the market back above the high, above the 92.40 over here, the way is open to the next point, and the next one is here round about 93.50, and this is it's a good position. So for this situation that we have here, it's a peak for your watch list, and just check out where the markets will go. That means from now we don't know what the correction will be. This is just one day at the moment where the prices come back a bit, so a little pullback, and the pullback can go. We check the hourly chart here. You see this level over here. You have a small support over here in the area round about 91.80, 91.85, round about in this area over here. And when you will see prices below this level, just let me mark this for you over here. No, it's not red, I need green. This is it. So here, this is the current support level, and when we see prices below this level, the next targets are quite easy to find. It's just it's easy to have a look to the lows that we have here in this trend, and the first low is here round about 90.60. The second one is here 91.28, here 91.60, here 91.28, and then here is the next one. It's good breakout level. You see the strong bullish candle here. That was the same that we had in the daily chart before. It's last Wednesday. It's Fed time, and it was the time around about the release of the FOMC meeting notes and the press conference with Powell, and this was the reaction. That means when we see maybe some regression, we have some plans over here, but as soon as we start going back, at the moment we should cross over here, cross over the high round about 92.40. But when we see a bit lower correction, you just have to wait until the correction trend is broken, and we will see a new uptrending market here in the DX. That means I'm quite bullish for the moment for the DX, and we see the potential from the upside. But at the moment, it's just a trade for your watch list. that means you have to wait till we will see at the end the breakout of the correction. At the moment, must it be over here, but maybe we will see a bit lower prices for the regression, and then will we see a break in here over the uptrend, and then we will see the markets go higher. That's from my side, and yeah, I hope the internet was fine, my sound was good to understand, and I hand over my monitor and the microphone to Martin.
Thanks.
Everything was fine. Okay, Martin.
Mike, everything was great.
Fine, thank you.
Very, very well. Your screen was seeable, and actually I liked your setups. So just let me grab the screen. Okay, so here we are. Well, we saw some short setups today from some of the traders. I'm back with 2 long setups here. It seems at the moment I'm the only bull in the pasture who's still here. But I'm still preferring the long side in the markets, so I tried to find some good trading opportunities for the long side for today. And okay, so the first one is Smith & Wesson. Smith & Wesson had earnings on Thursday, really great earnings. We had $1.71 on profit per share. And if you take a look at the earnings history, you see how tremendous the last quarter was. And in fact, for the last 5 quarters, we really saw steady growth here in terms of earnings. But if you take a look at this row down here, we can see that the stock is still trading at a price-earning ratio of 4.3. So this is very cheap, actually, compared to the overall market. We take a look at the S&P, it's around 36 at the moment. This is what CNBC tells us here. So to make it short, we had a great quarter, and we had a great overall business year for Smith & Wesson, because they already finished the business year 2021. Now it's starting 2022. And what was really a milestone for the company, it's a company with a 169-year history. And for the first time in 169 years, they made net revenue of more than $1 billion a year. So that's really great. So what they did actually is they set up a new share repurchase program for 50 million. They raised their quarterly dividend by 60%. Actually, they started to pay a dividend last year, I think. So, and now they already raised it around 60%. And so the overall posture is really nice, really good. Also great was the balance sheet. They do have more than 100 million in US on cash on hand with 0 debt at the moment. So this is also a great fundamental setup for future growth for the company. And so it's not really surprising that in terms like simply Wall Street measures the fair value. We can see that at the current price of around $23 the stock seems to be undervalued more than 20%. So simply Wall Street sees the fair value somewhere around $30, and this is where my price targets are in the same level. So let's take a look at the chart. You can see on Thursday after market close there's been the earnings release, and this is the rally we saw on Friday. Big move, around 18% performance for the day. And as you remember, it was a red day, so markets really came down. We had weak markets over the last days, and we see the Smith & Wesson was exploding, really exploding to the upside. And take a look at the volume here. The volume of the daily chart, it looks really great. what I always also like to see is that the relative strength of Levy, measured after Levy, is on a new high. It's really strong with 1.24 at the moment. And we see compared to the S&P 500, we saw an underperformance of the Smith & Wesson stock in the beginning of the year. But then from March this year on, it was taking up, and now it has greatly outperformed the S&P 500. I also like the weekly chart here. We see strong RSI on the weekly chart moving into the power zone above 70. And what's important here is if we take a look at the last breakout levels here from the weekly chart, this was the breakout level, 21.55. In the end of last week, it didn't really look as if the stock could manage the weekly breakout, but with the strong performance on Friday, there's this bullish breakout on the weekly chart. So I would expect continuation of this current uptrend. And we see the last highs of the stock have been around 27.80 US dollars, and I'm expecting the stock to move above this level and maybe go somewhere around the $30 level. So for the entry, we actually, as always, have different possibilities of taking an entry level. Let me take a look at the pre-market prices. Pre-market prices somewhere around 23.58, so 23.50-ish, around the high of Friday. This is actually pre-market move at the moment. So if we see a breakout to the upside, it could be possible that the stock just keeps on rallying without a bigger retracement. So if you don't like to trade breakout setups, you may be just watching the stock moving higher. If you are more of an aggressive trader, you could trade the breakout. But what I would prefer actually to see is, just grabbing a tool for drawing, is a small retracement and then the next move to the upside. So retracement level, it's a bit hard to find with such a big move, but what we often see in stock markets is after such a big momentum move that we can see 1 or 2 days of low range sideways movements before the stock continues in the trend direction. And maybe we have the possibility to grab the stock somewhere down here at this level of the last highs, at this breakout level. But if the market manages to break out directly and keeps on moving strong, maybe we can see a setback to this last breakout level here in this place, and then enter somewhere here in the retracement. So it's like always, you do have the possibility to trade the breakout directly. You do have the possibility to wait for a pullback to get a cheaper entry. But either way, I like the setup. What we can see, if we take a look at the indicators, it's also very nice. We see a strong Gersh trend indicator, a strong trend in the market getting stronger, and we see the slow stochastic indicator has a bullish crossing down here, of course produced by this strong move on Friday. Okay, so that's the first one, Smith & Wesson for the long side. And it seems today is weapons day for me. The second one I have in mind here for the long side is ammo. I like the ticker, POW. Ammo, what are they doing? They're producing ammunition, actually, ammunition for guns, for self-defense, for hunting, for everything you can think of. And they are quite new on the stock market, actually. But I like the returns. We have a 7-day return of more than 10%, and we have a 1-year return of more than 230% compared to 38% for the whole overall US market. So really strong outperformance here. What I also like is that the company is expected to become profitable during this year. The green line here is the earnings. So expected earnings growth is great. revenue growth is even greater, and we see it here in the analyst future growth forecasts. We have an annual earnings growth rate forecast of more than 100% compared to 28% for the industry, 16% for the overall market, and the annual revenue growth more than 65% in the forecast. So that's really good forecasts for growth and earnings. I also like the financial situation of the company. Debt is coming down. They're reducing debt and on the same time building up cash reserves, getting strong equity here at the same time where debt is coming down. I love this on the fundamental side. So let's take a look at the chart. Very interesting level here as well. 790-ish. This is a breakout level. This is breakout above these highs on the daily chart, and it's also a breakout level on the weekly chart. We have the weekly breakout level somewhere here at 750. Strong weekly breakout. We have the RSI moving to the upside, not yet in the power zone, but already moving to the upside. I like the swings that the stock is showing here. We managed to keep above the 10-week moving average. We have this strong momentum move to the upside. We have this strong breakout. I like the manner that the price is moving in. We still have a negative Gersh trend. That's the only thing bothering me a little bit, but I'm willing to play this one on the long side, even though Gersh trend is still still negative, because what's good for prices also in this stock is that it is included in the new Russell 2000. So from the next week on, I guess from Monday on, we have the new mixture of the Russell 2000, and ammo is a new part of the Russell 2000. So I'm expecting the funds buying during this week, maybe most intensive on Thursday and Friday this week, because from Monday on they all the ETFs, all the index funds should have this stock in their portfolio because it's included in the Russell 2000 from Monday on. So and I guess this could propel the prices up as well. Yeah, okay, that's it so far from my side. These are the two stocks of the week from my side: Smith & Wesson for the long side and Ammo Inc. also for the long side.
Yes, Martin, many thanks. Seems the gun producers are turning out as skyrocketers. Yes, I think we are done today. Very interesting analysis from all of you guys. Many thanks for that. Yeah, I think we are in front of a very interesting trading week. Yeah, where is the market going? Is it going into the long direction, continuing in the long direction? Is it maybe going back? Is it going into a correction? So yeah, we will see. I think we provided quite some good trading ideas. Yeah, I would say thank you to the audience for joining us and following us today. Yeah, we are here again on Monday at 8 a.m. New York time, at 2 p.m. Middle European time, and 10 p.m. Japanese time. Then you will find the recordings on our YouTube channel, the xTasyTraders. Just have a look at it. Then many thanks. Have a nice week, nice trading week, successful trading week, and see you soon. Thank you. Bye.
Bye-bye.
See you next week. Bye-bye.
Bye.